Welcome to the BD Daily Finance News Podcast. Daily insights on markets, economy, and investing. I am your host, here to bring order to the chaos of the financial world.
And I'm the guest, here to ask the questions you're too embarrassed to ask, and, frankly, to distract myself from the fact that I have to cook a turkey later. Happy Thanksgiving to the Americans, and happy Thursday to everyone else.
Yes, happy Thanksgiving. Today is November 27th, 2025. While the markets in the U.S. are taking a breather, the rest of the world is busy rerouting supply chains and launching hostile takeovers. We have a packed show.
Packed like a Black Friday line, but with more algorithms and less trampoline. Let's get into it.
First up, a major story in tech and geopolitics. Chinese tech giants, specifically Alibaba and ByteDance, are taking their AI model training offshore. They are setting up data centers in Southeast Asia to tap into Nvidia chips.
Wait, offshore? Usually when I hear finance and offshore, I assume someone is hiding money in the Caymans. Are they hiding robots now?
Not exactly hiding, but definitely maneuvering. The U.S. has strict export controls preventing high-end Nvidia chips from being sold into China. However, those controls don't necessarily apply to a data center in, say, Malaysia or Singapore owned by a Chinese company.
Okay, hold on. So it's basically like being banned from the school cafeteria? So you order Uber Eats to the playground fence and eat it there?
That is a surprisingly accurate analogy. They are moving the engineers and the data to where the hardware is allowed to be. This matters because it shows the lengths these companies will go to stay competitive in the AI race. We are talking about billions in capital expenditure shifting to Southeast Asia just to access compute power.
So if I'm a developer, this means the AI Iron Curtain is more like an AI Swiss cheese, full of holes?
Precisely. And for investors, it suggests that U.S. sanctions might slow China down, but they aren't stopping the development. Plus, it's a huge boon for digital infrastructure in Southeast Asia. Expect to see more data center REITs popping up in that region.
Great! I'll add Malaysian server farms to my Christmas wish list right next to Bitcoin not crashing.
Moving on to aviation. Venezuela has banned airlines that halted operations following a U.S. warning. The U.S. Federal Aviation Administration warned that flying over Venezuela was risky, so carriers stopped. In response, Venezuela revoked their licenses entirely.
This feels like a bad breakup. Oh, you need space? Fine, I'm changing the locks and keeping your hoodie. It's the you can't quit, you're fired strategy.
It is a diplomatic retaliation, yes, but the economic impact is severe. Venezuela is effectively isolating itself. Imagine your city suddenly banned all buses and trains because the drivers complained about potholes. It hurts the local economy far more than the transport companies.
So for normal people there, getting out or getting goods in just became a nightmare. Is this going to affect oil prices?
It adds friction. Logistics become harder. Business travel becomes impossible, and insurance premiums for anything touching that region skyrocket. It is another layer of risk in an already volatile energy market.
Note to self, Caracas vacation. I'll go to, I don't know, Cleveland. It's safer.
Last pivot zu something consumer-facing. Deutsche Sportswear-Brand Puma sah es Shares pop 14% auf Reports, dass China's Anta Sports might be looking to buy them.
Puma? The cool cat brand? And wait, who is Anta? Are they the ones who make those shoes that look like toasted marshmallows?
Anta is actually the world's third largest sportswear company by revenue. You might not know the name Anta as well, but they own Amer Sports, which owns Arc'teryx, Wilson, and Salomon.
Oh, so the $800 rain jacket I bought to walk my dog in a light drizzle, that money went to Anta?
Indirectly, yes. Basically, Anta is a giant aggregator of brands. Buying Puma would give them a massive foothold in Europe and the soccer market, challenging Nike and Adidas directly. It's like Disney buying another studio. It's about content, but in this case, the content is sneakers.
So if this happens, does Puma become cool again? Or do they just get more expensive?
Usually, these consolidations are about efficiency and global distribution. For the consumer, you probably won't see a change in the shoe, but shareholders are loving it. Puma has been struggling a bit compared to its peers, so a buyout premium is exactly what investors wanted.
Well, good for them. I'm just hoping they don't combine Arc'teryx and Puma into some sort of high-performance goth soccer cleat.
We can only hope. That wraps up our stories for today. We covered the AI chip shuffle in Asia, the airline standoff in Venezuela, and the potential mega merger in sportswear.
And we managed to do it without falling asleep from tryptophan. Success!
Indeed. If you enjoyed the show, please subscribe and leave a review. It helps us keep the lights on and the data feeds running.
And makes me look good to my producers. Go eat some pie, watch some football, and check your portfolio tomorrow, not today. Bye!
See you tomorrow.